Hi guys, this is Simon with Trade and Perform Coaching doing the review from Friday. It's a Sunday evening. And so let's kind of review a few things. First of all, obviously we had another straight up day. No one expected that. We started the day around 17:30. We ended up the day about give or take 17:36, and we climbed to 17:40 before we did that. Now, okay, so one of the things that I want to stress about trading, since obviously no one needs a recap, we all know exactly where we closed, but how can we make money from this situation, or how can we avoid losing money, may also be a very important question, right? I rather come from the objective of how can we make money. So one of the things that traders really kind of get into is the what is the, the market's gone too far. It can't extend this far without pulling back. It's got to pull back, so on and so forth. And it really gets them run over early in the game, right? And it really can suck, quite frankly, because you kind of look at it and go, well, we've gone straight up 100 points at this point. And my only suggestion in that situation is look at which way is the easy way, right? And if you feel the market's truly just gone too far, ask yourself your objective. Is your objective, are you trading for 5 ticks, 2 points, 3 points, whatever that case may be? Or are you trading for a 20-point swing to the downside or a 20-point swing to the upside? If you're an investor and you're saying market's gone too far and I'm taking profits, that's a fine mentality to have. I have no issue with that whatsoever. But if you're a trader, a day trader in particular, your focus has to be on what is the easiest way, which way is the water flowing, uphill or downhill. Well, in this case right now, it's flowing uphill. That's the easiest way. And there's a couple clues that can help us with that, right? So the first thing that we look at is yesterday's uptrend. And let's see if we can squeeze this in a little bit and down a little bit, right? So if we look at Thursday, we just kind of do this right here. We take a trend line. I'm going to pull it up like that. And then I come and look at what's going on today, and I'm like, we still solidly held this trend line. So the first thing that I know coming into the day is that in order to get any serious downside, the first thing that I need to see is I need to see the market below Thursday's highs. And we didn't get that all day. Never at any point in the market we were below Thursday's highs. And once the first hour's lows were established, we never penetrated beyond the first hour's lows. In addition, we didn't get gap fill even. We didn't even come into gap fill. And that's always one of the signs of a strong market, right? Either way, if a market gaps down and can't get to gap fill, sellers are in control. In this case, we gapped up. We couldn't get to that gap fill. Buyers were in control. Super. At that point, you have to decide, well, if I'm not going to participate on the long side, where is it? What is the area that I would like to see to participate on the short side? Well, I work really hard to get initial resistance into that right location. And as it turns out, look how nicely stretched we are from the close here. This close was roughly 1728 and change. We're stretched all the way up to 1738.50, all the way to 1740, right? And there you actually got a nice rotation down to 1736. Now, was it perfect? No, it was actually only 3.5 points, but of all the places you could have chosen to put on a good trade to the downside, that was certainly one of them. The other issue was pre-market resistance, right? You saw that we opened and the pre-market resistance did hold off the open, and then we pushed down towards gap fill, but we did not get gap fill. So, which was a sign of strength. And on the way back through, we were able to blow right through this pre-market resistance, which actually became quite viscous. But the question always comes back to me, well, how do you know the zone was valid or not? How do you know that that zone worked because it got blown through on both sides? It's always an issue. So the first thing, if you notice that I said in the video that I sent out to my coaching clients, right, the opens have been very, very difficult lately. Either they've been very whippy in a wide range, or they've just shot in one direction or another direction, making it really hard to game the open. And I said the best strategy to make money on Friday was to wait for an extended rotation, either up or down, and then look for that trade to the downside. Now, go back to the philosophy that I have that you only need 1 or 2 good trades a day to build your account. When we were up here, we had tick divergence, okay? We were well extended, and we got a nice rotation down there at the end of the day. Also, if you look at this trend line that we held here, right? See this? we established through the day. And we're going to pull it up just a little bit tighter. But here we had finally broken this uptrend channel that we'd been in all day long. And it gave you still gave you a nice entry and still gave you a nice rotation down. You only need 1 to 2 points and 1 to 2 trades a day to build a solid trading account. And what too many traders try to go and do is, instead of having a plan for one trade and mastering one type of trade, and it doesn't matter what it is, whether it's a swing trade, short trade, 5 ticks, 2 points. I definitely have trades that I prefer, but instead of mastering one trade, they look at the market and they see an endless number of possibilities. And from a psychological standpoint, it really makes it very difficult to master. There's very few traders who can trade every trade that's out there. And most successful traders have a small portfolio of trades that they're very, very familiar with, right? And they execute those trades. They know their entry, they know their exit. And in order to calm their mind, not only do they know their entries and their exits, they pre-plan their entry. They already know their stop loss before they've ever even considered getting in the trade. They already know their stop loss, and they already know their exit. And it makes their life very simple. It clears their mind and it lets them focus on trading. And guys, if you're trying to build an account and you're trying to stay calm, the more open-ended options you leave yourself while you're trading, the more stressful trading becomes, the harder it becomes to succeed. And all your little demons, all the things that you wish you wouldn't do while you were trading, come popping out of the corners. And the way to combat those guys is breathing exercises, stay calm while you're trading, have a solid trade plan with pre-planned exits, entries, and stop losses, right? And know that you only need 1 or 2 trades a day to build a very solid trading account, and it can be done. But if you're going all around, and what a lot of traders will do is they'll go, well, let's say, for example, someone picked this high right here. They shorted this, and they said, that was my trade. I shorted this. And they collected 1 or 2 points, right? So they took 2 points, and then they see that it rolled down 2 more points. And they go, I knew it was going to roll over. And what a lot of times they'll say is, you know what, not only did I know it was going to roll over, it's probably going to gap fill, and it's going to more than fill the gap. We're going to go down, and they'll jump back into the trade on the short side, right? Maybe right here, as a matter of fact. And then the next thing you know, it whips around and comes all the way back up against them, and they panic, because now you're not trading from a trade plan standpoint. You're trading from an emotional basis. And trading from your emotions is a very hard place to do when it's the basis for your trading decisions. On the other hand, the trader who said, my trade plan is to short at 1736 for whatever reason, they had that plan, right? And my plan is to take 2 points. So they took their 2 points at 1734, right? And they said, my next plan is X. And when the market gets here or here, I'll enter that plan. This is my stop, this is my entry, and this is my exit. That trader's emotions can go towards analyzing what's going on in the market, the other trader's emotions instead of their own emotions, right? They're not having to read the market tick by tick and figure out what's going on, because they already have an established trade plan going in, and it lets them be calm. So what most traders are doing in this market to lose money, they don't have a trade plan beforehand. Even if they have a trade plan with good support resistance areas, they don't have a plan for executing an edge if they know what their edge is, right? And then the third piece of that is they're constantly filled with regret because they haven't settled on a notion of what is sufficient for their trade to make money. In other words, if 2 points is for you and you see the trade go 10 points after you've taken your 2, are you going, I knew that was going to go 10 points and I knew I shouldn't have sold? Because you know what that's going to set you up for next time is when you get into your trade and you do get your 2 points, you're not going to take it. And then the market's going to whip back against you and you're going to go, I knew that time I should have taken my 2 points. But the fact is, guys, we don't know what the market's going to do. We don't know how high it's going to run. We don't know when it's going to pull back. Do I think it should pull back? Sure, I think it should pull back. I'm not trading on that information. If you're trading on that information, you better have more than I think it should pull back, right? You better have some parameters for that. Like one of them for Thursday was, first of all, a trend line break would be helpful. Number 2, trading below prior day's highs. That would be helpful. Number 3, an actual gap fill. That would be helpful for a downside pull, for a downside move. We got none of that. And so you either have to resign yourself that I'm shorting from levels higher where we're extended, or I'm going to play to the long side, one of the two. And either one of those strategies would have worked. So I hope that gave you some insight as to how a trader thinks. Trading is not easy. If you would like some help in getting your mind straightened out and your trade plan straightened out, I can certainly help guide you in that direction. I've done very well with helping traders go from break-even or losing traders to consistently profitable traders, right, who can manage in a difficult market. And this by far is a very difficult market because it's not two-way. It's all one-way market. It's either all straight up or all straight down. So I'd encourage you, if you don't get help from me, get help from someone. There is help out there. Stop burning your money and get consistent, because this can be done. It can be done by anybody, right? Anyone can trade profitably, but you got to have a plan. You got to have a strategy to execute your edge and pull the money out of that edge, right? And you got to have a way where you're staying calm and focused on what you're trying to accomplish, and have an understanding that how you're going to accomplish your goal over time. Anyways, my name is Simon. I'm with Trade and Perform Coaching. I hope everyone's having a great weekend. I'm going back to watch the Indy game, Indy Denver, and I will see you all in the morning. Have a good night.